Good evening, it's Monday the 23rd of July 2012. I just wanted to quickly take you through a few Aussie charts, specifically the hourly and the 15-minute chart, and just some levels and supports currently watching to see how they play out, and just some takeaways that I've got from today's trading, which might help you in some small way. Right, just starting on the end of day chart on the Aussie, I've drawn in the charts in a single line because on the candle it's difficult to actually see what's going on. This zoomed out, so I just wanted to highlight two support levels, two lateral support levels, basically starting in March 2009, the March lows after the 2008 crash and bang, touching in August 2011. And basically we're working our way towards the sort of level here in 28,900, where we'll eventually intersect that very long-term support level. On the more medium term support, starting in same spot, August 2011, touching in October, and then I think it touched in June, and it's touched quite a few times now in July. We have a steeper lateral support level. So for me it's all building up towards a sort of test of this long-term lateral support level. I'll zoom in now on the candle charts just to give you a clearer view on that. But yeah, that's what I'm currently looking at. If you wanted to be a little bit melodramatic, you could say that there was a head and shoulders pattern forming, and we're pretty much testing the neckline right at the moment. Let's just change it to candle and get zoomed in a bit. And yeah, left shoulder, head, right shoulder, and as you can see we stuck right on that lateral support line. So a break of this line, target wise, could be in the region of 1,300 points or so, if not more. But yeah, there's still a long way for that to play out. So that's just the level I'm watching. The very near term supports are 29,400, which we bounced off today, 29,200, 29,150, and then ultimately 28,900. A break of this would see us making a new low, and so the trend would be down as we've failed to make new highs. This 30,800 ceiling level over here just kept coming down each time. Something else I just wanted to point out for interest sake is there's been a couple of island reversals through 2012, which I find quite interesting. Most recently Friday and today. Island reversal is basically an exhaustion gap up and a breakaway gap down, and yeah, it's a very strong reversal signal. Volumes also play a bit of a role if you had to watch or listen to the textbooks. So yeah, it's just something to keep an eye out for. Then looking at today's 15-minute chart, we basically last week there was a lot of it was a dead market, to be quite honest. There were a lot of range days, and yeah, it was hair pulling out kind of stuff. The majority of the action was, if anything, was in the mornings and the afternoons. So yeah, you have to adjust your trading style. And if you can't adjust your trading style, then you need to realize what kind of market you're in and stay out. I think that's very important. Having said that, if you're patient and you played all the breakouts, sticking to your stop loss, eventually you're rewarded. So yeah, it just pays to stick to your guns, but stick to your stop losses as well, and just manage your risk. The opportunity eventually always arises. So just starting this morning, we had this sort of lateral support line which put us in the 650 region, and yeah, we gapped straight down to S2 at 297.38 or so, and yeah, we never actually ever got up again. So for me, it's very much a downtrend day in terms of that we started at highs. We never really tested the highest point, and we ended pretty much towards the lows. Just one of the more important takeaways for me today was just the increase in volume. Straight off the bat, you could see that these big red candles were supported by some big volumes, and then later in the morning, as the overseas markets trickled up slightly, volumes completely dropped, and yeah, we basically trickled up with the leading markets. Just based on these longer wicks, yeah, there was lots of resistance in play, and we never actually really looked like getting anywhere near above 650. Then immediately when the selling started again, volumes picked up again, and it's interesting to note that at 2:30 or so, the volume started picking up again. I know some people argue that you have to just stick to your system and trade your system, but unless you position trading, I don't see any benefit in taking positions intraday. It's just more hassle than it's worth, in my opinion. So yeah, just looking at support levels and possible plays from here on out. 29400 is definitely a level to watch, and then ultimately 29150, which will put us back in the sort of level over here. So those are your support levels to watch. There's no reason that the support will not hold. There's a lot of fundamental sentiment changing events happening in the market all the time, specifically around Europe, and every second day there's a new QE rumor, whether it be China or the Fed. So there's no reason why the support cannot hold. I'm just leaning towards the short side and saying that eventually, the bulls have to run out of steam, and the bears have to be given their chance to test the waters. So yeah, I'm leaning towards 29,000 long before we see 30,000 again. But that's just my my bearish bias speaking. But yeah, you've got to trade what's in front of you and trade your charts. So you've got to wait for either confirmation towards the long side or the downside, and stick to your guns and make sure that your risk is tight on either side. So yeah, just to recap, there's potential for a head and shoulders pattern developing on the end of day chart. Left shoulder, head, right shoulder, and yeah, the neckline starting in August last year, and yeah, we are pretty much right there on the edge of potential breakdown. So it's just interesting to see how it plays out. Yeah, good luck.